And just before we get into the show, we need to let you know that at 11:30 a.m. West African time, we will be breaking into Business Edge because we will be expecting the extraordinary summit on the political situation in the Republic of Niger to be a live broadcast that we take. Now, we know that ECOWAS heads of state and governments will be deliberating on the failure of the Niger junta to hand the ultimatum by the regional bloc to reinstate President Mohamed Bazoum. So as soon as that event starts, we'll be breaking in and taking it live for you right here on News Central. Now, let's get into the business we have for you. Now, the Chamber of Corporate Trustees of Ghana has indicated its readiness to participate in the alternative domestic debt exchange program that's being offered by the government. Now, this comes on the back of an earlier announcement by the Ministry of Finance for the restructuring of some 31 billion Ghana cedis pension funds in the second phase of its domestic debt exchange program. So in a statement that came from the Chamber of Corporate Trustees, it said that government is seeking to exchange the pension fund's billions in principal amounts of the eligible bonds for a package of new bonds. This invitation is intended to enable the pension funds to preserve their patrimonial value while exchanging their eligible bonds for the ones that offer more potential liquidity. Joining me now is Thomas Kwesi Esso. He's the Executive Secretary of the Chamber of Corporate Trustees of Ghana. I beg your pardon, Thomas. The Chamber of Corporate Trustees of Ghana. Thomas, welcome to Business Edge. Thank you so much for joining us.
Good morning, and good morning to your viewers also.
So when we look at this domestic debt exchange program, it's all about giving eligible bondholders the opportunity to, of course, exchange their debts and move further with the plans that they have in terms of exchanging debts and finding opportunities for their existing domestic bonds and exchange those for the new ones that will, of course, mature on different dates. There have been a number of challenges and concerns along the way when it comes to the DDEP. So for the Chamber in particular, what concerns have kept you from joining before now?
Thank you very much, and thank you also for having me on your news network. Let me say that the Ministry of Finance and the Chamber of Corporate Trustees and its members have come a very long way in this. As you are aware, the domestic debt exchange program started around December last year, and then when the initial offer was announced, the Chamber rejected that offer because we thought that that offer was very injurious to the pension fund contributors, especially the workers. And then if you read through the IMF SLA agreement also, it made it categorically clear that whilst the deal intends to restore macroeconomic stability, at the end of the day, it also seeks to protect the vulnerable. So we felt that the workers contributing to pension funds are really vulnerable in the society, and therefore we needed to take action to ensure that we could protect their interest. And the initial DDP, as was announced, was very injurious because if you are aware of it, 2023 government was going to pay 0 coupon, and then 2024 5%, and then 10% from 2025 onwards. And that was not going to augur well for the operations of the pension funds, and especially also for workers when they go on retirement. And therefore, we rejected it. And then after the rejection also, we had organized labor who put up a roadmap which also compelled government to come to the table and to exempt the pension funds from the initial domestic exchange program. And then after that exemption, there was a second bullet point which says that organized labor with other associations, including the Chamber of Corporate Trustees, were going to work with government to have a very acceptable deal to both sides of the part of the table. So we started the dialogue with government since February, and we've been discussing a whole lot of issues with government. And I think when we as the chamber went into the discussion, it was our objectives that any bond that will, any agreement that will come out with must protect the patrimonial value of our bonds, and especially to protect the contributions of the workers. And therefore, it was our main objective that we were not going to lose on the value of the bonds for workers. And secondly, also to ensure that those bonds are tradable on the secondary market so that we can be assured that when we need to go to the secondary market for any liquidity, we can also get it from there. And thirdly, to also ensure that government will also commit itself to the payment of coupons at the maturity. and therefore so that we can have an assurance of liquidity coming to us. And so when, after all these discussions, let me also say that the chamber actually put together a technical team that included a transactional advisor and a lawyer to ensure that we were able to get to the level that we are now. And so when government came out with the alternative offer that was presented to us some few months ago, we took it. We also went back to Peru to review the alternative offer to ensure that it really fulfilled the objective that the chamber set itself to have these various discussions with government. And so that is why when it was announced, we have to also issue statements and then tell our members that the offer actually meets our objectives, and therefore they can also sign onto the offer as has been announced by the government.
So Thomas, and I like what you're saying there, because that was the next question I was going to get to, in terms of the fact that given that the chamber represents licensed corporate trustees in Ghana, with you now signing on to the DDEP, it's basically a sign of confidence in how government is now handling. Because at the beginning of this debt situation and the exchange conversation, there are a lot of criticisms. We know that labor at one time was even threatening strikes. Pension funds were also being very critical of what government was offering. But now with this alternative conversation, for you as the Chamber of Corporate Trustees of Ghana, that means you are now confident in the way government is planning to handle that situation. Am I correct?
Yes, we are correct. And thank you very much for that question also. I believe that that was expectations from every one of us, in every association in the financial industry, or every category of bondholders, that at the beginning of this process, we all expected government to sit down with all of us to dialogue. I mean, we are all Ghanaians, we have one Ghana, we have nowhere going. And I believe that we could have understood government from its angle or its perspective. And we also wanted government to also understand us also from our perspective. And then from then on, all of us can have a middle ground that we can all land safely. And that was the purpose of it. But at the beginning of this process, that was missing. And I'm sure that was the reason why a lot of the segments of bondholders had issues and then have to take certain actions, and especially organized labor who declared strike. And I believe that if that strike had come on, that was going to cripple the whole country. And therefore, governments came to the party, came to the table, and we started this dialogue. And I believe that if we have started this dialogue a little bit earlier on, we could have all reached these targets in time for government. And we are grateful also to the fact that government also announced to the fact that dialogue was important, and therefore, in an attempt to also ensure that
Hello, Thomas. So it appears we may be having some technical issues with our guests from Accra, Ghana. They're looking at how the Chamber of Corporate Trustees of Ghana is now signing on to the government domestic debt exchange program. I do believe Thomas is back with me. Thomas, are you back with me now?
Yes, I'm back with you.
Fantastic. Okay, so I wanted you to finish your thoughts on that, because I want us to look at what this alternative offer is. So just basically having you lay it on the table for us to understand what exactly government is now offering months after this conversation commenced. So let's take us through that.
Help me a lot.
Go ahead, Thomas, I can hear you.
Yes, I'm saying I lost you, so I couldn't hear your question. So
okay. So I wanted you to finish your thoughts before that interruption in our conversation, and then we take it on to what the alternative offer that government has extended its hands on concerning pension funds and exchanging the holders of domestic notes and bonds of the central government and two others, in terms of what those offerings really look like.
Okay, so in concluding what I was saying initially, so I was just saying that government thought it wise, after all the pressure from the organized labor, to sit down with us and have a dialogue. And I believe that after all this engagement, we understood the perspective government is coming from. And let me also make a point that when we're discussing this, even with our members, one of the members made a very telling point to all of us and say that the recovery of the economy is also in our interest as financial market players. And I believe that that is also so. And therefore, we also went into the discussion, having at the back of the mind that if this economy recovers, it's also into the interest of all of us in the financial market, and especially Ghanaians in the economy. And I believe government understood our perspective of the argument, as we also understood their perspective. And then we all had a deal that government and then organized labor, the Chamber of Corporate Trustees, and pension contributors must be happy for.
Mm. Okay, so I want us to look at something else because the government is seeking about 31 billion, is seeking to exchange around 31 billion Ghana cedis in principal amount of the eligible fund for a package of new bonds. And I'll get you back on that in just a moment. But what, if any, potential challenges or risk is the chamber looking out for? Because even any sort of investment is a risky one, even if it's a low risk. If they tell you that the risk is down to 0.0001%, there's still that amount of risk. So for the chamber, given these alternative funding arrangements or the alternative arrangements that government is now making, what, if any, risk do you see or challenges that you want to be prepared for and have your members and your holders be prepared for as well?
Well, let me tell you that the experience of this domestic exchange program have almost eroded the theory that government's financial instruments are risk-free. I'm sure in the textbook we've all read and studied, wrote exams and passed on the fact that we all said government instruments are risk-free because we believe that government will never default. And then government is also a continuum. So that has always been the theory that we all studied. But with the experience of this domestic debt exchange program in Ghana, now I'm sure all of us are revising our notes and see that government instruments can never be risk-free as we fall it. And rightly, as we said, if you talk about even 0.0001 of risk, it's also a risk. In life, I'm intended to believe that there will be no risk-free anything in life again. And therefore, yes, even though we are confident about the arrangement that governments have told us that they are making to fulfill the coupon payment and the maturity payment of these bonds, we still know that, yeah, there can't be any risk-free now. And so we are also keeping our eyes wide open. And one of the measures that we took in aligning with labor, because labor have also issued a statement, even though they've also given they've also accepted the new alternative offer and advising their members. We are all aware that there could be challenges in this program, and then labor have also given the warning that they are monitoring government and they will hold government to the wills that they fulfill all the obligations as it is stated. And so we hope that government will keep and abide by that assurances. As I sit here, since the deal has not expired yet, the exchange memorandum has not expired yet, and our members are still going to signing on, I believe that when it comes to the coupons payment as stated in the memorandum, and if government is able to fulfill its obligation, then we can say, hooray, governments have fulfilled its assurances. But if not, I'm sure that our next processes or our next roadmap will be kicking. So we believe, we don't want to get there, but we believe that government will keep its side of the bargain and fulfill the assurances that is given to us.
Okay, so let me also ask this now. In terms of the impact you expect from the alternative DDEP when it comes to liquidity and tradability of eligible bonds for pension funds, what are we looking at here? What should people keep in mind or in view rather? Because again, as we said earlier, things can change. Government was holding quite steadily to the first attempt of this exchange, of this debt exchange program, but they saw that they had to give room, they needed to shift ground, and I would say there's been some level of compromise from the government of Ghana towards all of those involved in this process. So in terms of the tradability and liquidity when it comes to the alternative DDEP, what are we keeping in mind?
Thank you very much. I think the first major objective of the chamber was to ensure that the patrimonial value of the bonds are still withheld. So if you talk about the patrimonial value, what we are trying to say is that whatever offer or offers that we have in the new bonds, for the new bonds, we are not expecting the value of those bonds to reduce. I mean, we are expecting to keep those value at the same value as if we still holding the old bond. And then, so that is our major objective. And the secondly is the tradability of it also. If you understand the pension funds industry, the pension fund is an industry that thrives very much on liquidity. If you talk about liquidity, we are talking about contributors trying to withdraw part of their benefits, and contributors who also go on retirement at their age, at the retirement age, the legal retirement age, they will also put in application for the withdrawal of their benefits. And therefore, at any point in time, there is that need for liquidity to ensure that contributors are made whole of their benefits. And so when we talk about tradability, sometimes your contribution that you receive periodically may not be able to meet the withdrawals request from your contributors. And there will be the need for you to go to the secondary market to trade in your bonds or sell your bonds that you are holding and then get cash for those bonds so that you can be able to pay the workers or the contributors who have applied for their benefits. And therefore, I mean, rightly so, there's nobody who wants to work and retire at the age of 60 and you keep on giving the person excuses of lack of liquidity and therefore you cannot pay their benefits. I mean, it doesn't augur well for our senior statesmen. And so, in order to ensure that we have the secondary markets available and our bonds are tradable, that is the main reason why we needed to also consider accepting the new bonds in the domestic debt exchange program so that we can be able to trade it. Because invariably, if the new bonds start trading actively, there is the high probability that the old bonds will lack the form of trade. And if you're not very careful, you'll be holding those bonds, but you can never trade them. And secondly, on the liquidity side also, bonds always pay coupons periodically. And in Ghana, our bonds pay coupons semi-annually. And then our administrators, the pension fund administrators, always plan with this semi-annual coupon payments so that they can also schedule some of their payments to meet this semi-annual payment of coupons. And so, and that also regularly gives a certain level of liquidity to the pension fund administrators. And that is the reason why we needed also to consider this exchange and then come into the new program so that our bonds on the market, so that governments will have that commitment to actually service the new bonds in terms of the liquidities, in terms of the coupon payments, and then when they mature also, the payment of the material. So these three critical objectives were why we put our technical team together and then asked them to have this dialogue with government to arrive at this position. And with the assurances that we've had, and with the programs that government have also tried to show to us, we believe that when truly this domestic exchange program is over, the new bonds will be actively traded on the Ghana fixed income market, and the liquidity will also be available through secondary trades. And secondly, we believe that government will also keep its promise to regularly pay the coupons when they fall due on these bonds. And that is the reason why we have to accept this alternative offer.
This alternative offer. All right. So as we wrap up, let's finalize on that, because we know this program was introduced to help manage the domestic debt situation that Ghana is facing, also reduce the impact of the economic hardship on investors who are holding government bonds. And as you said earlier, this situation has shown that government bonds may just not be as safe as many of us have thought. But the final question I have for you, Thomas, is in terms of the potential implications with government's alternative domestic debt exchange program in terms of the overall financial landscape of Ghana, what do you think it is? There was a program or offering before. Now we're at the stage of an alternative DDEP offering on an alternative program. How do we expect this to impact it, if in any way, negatively or positively, the overall financial landscape of Ghana?
Thank you very much. I would have wished this question is directed to some of the personnel at the Ministry of Finance, because they have done the financial modeling, they have done the computations, and they know how they are going to land and then what they are expecting in all these programs. Yes, but from our side, what has been sold to us and that we bought into is that, yes, if you look at our new bonds that have been offered to us, we are expecting the payment of maturities in two tranches, one in 2027 and the other in 2028. And we know very well that that will be a very huge outflow of cash from government reserves. But we believe, I sincerely believe that the guys at the Ministry of Finance have done their financial modeling, they've done their computations, they've looked at the whole situation of the economy, they've done their projections in terms of revenue, in terms of coming from taxes, they've done their computation in terms of even what they'll be receiving from IMF, they've done their computation in terms of remittances and etc. So I want to believe that they've factored all this into their computation, and therefore that is why they are confident that they can achieve the objective that have been stated in the IMF deal, i.e., reaching the 55% of debt sustainability and 18% of GDP to 18% of revenue to GDP. So I believe that they've done their computation. I would have wished this question is for the technocrats at the Ministry of Finance, but with what have been shown to us and the analysis that we have done, we believe that government will be able to keep this promise, and we are holding government actually to its promises that is made to the pension fund industry, and perhaps on a larger scale to the other bondholders who have also exchanged or introduced into the new domestic debt exchange program.
All right, we'll leave the conversation at that. We've been following very closely with Ghana's situation, of course, the ways and manners in which Ghana has attempted to find its way out of this situation as well. So it's a conversation we'll continue to follow. Thomas Kwesi, Esso, Executive Secretary of the Chamber of Corporate Trustees of Ghana, thank you so much for joining me.
Thank you very much for having me, and I'm grateful. Thank you.
All right. And again, as I said, it's a conversation we'll continue to follow. We have the domestic debt holders on one side and international, or rather international bondholders on the other side, that Ghana must also find a way to placate. Now, they've attempted to call them to the table, but not all agreements have been reached. The IMF has also stepped in because there is, of course, a loan that Ghana has received approval for and is hoping to move forward with in tranches in the coming 1 to 2 years. But it's a conversation that is ongoing. You're watching Business Edge. We're going to take a quick time out. So when we come back, we have international business headlines. Do stay with us.